Hey traders, Gavin McMaster from Options Trading IQ doing a video collaboration with bar chart. And today we're going to be looking at understanding equity put-call ratios. Just before we start, a quick reminder that everything discussed is for educational purposes only, is general in nature, and does not take into account your personal circumstances. So welcome to today's video where we'll be taking a detailed look at equity put-call ratios and how you can use them in your trading. Equity put-call ratios can play a vital role in understanding market sentiment and predicting potential price movements. In this video, we'll delve into the concept of equity put-call ratios, explore how they are calculated, and discuss their significance in market analysis and trading decisions. Let's get started. So what are equity put-call ratios? Equity put-call ratios are essential metrics used by traders and investors to gauge market sentiment and potential price movements. As a quick reminder, put options give the holder the right to sell an underlying asset at a specified price within a specific time frame, indicating a bearish outlook. Conversely, call options provide the holder the right to buy an underlying asset at a predetermined price within a set time frame, signaling a bullish sentiment. Let's look at how we calculate put-call ratios. So on April 19th, Tesla had the following put and call volume across all expirations. So 1.1 million in the puts and just over 1 million in the calls. If we take the put figure divided by the call figure, that gives us our put-call ratio of 1.16. A pretty simple calculation. The importance of equity put-call ratios. Equity put-call ratios serve as valuable indicators for market analysis due to their ability to reflect investor sentiment and predict potential market trends. A high put-call ratio suggests increased bearish sentiment, indicating a possible market downturn. Conversely, a low put-call ratio indicates bullish sentiment, signaling potential market upside. Understanding and interpreting these ratios are crucial for traders and investors to make informed decisions and develop effective trading strategies. Understanding equity put-call ratios. A ratio greater than 1 suggests bearish sentiment, indicating more put options are being traded relative to calls, while a ratio less than 1 indicates bullish sentiment. Monitoring put-call ratios. Monitoring changes in equity put-call ratios over time can help identify shifts in market sentiment. So it's important to not just look at it on a day-to-day basis, but look at how it's changing over time and the trend. Tracking trends in the ratio can provide valuable insights into market dynamics and help traders stay ahead of potential shifts in sentiment and volatility. Here we can see the put-call ratio for April 2024. The market topped out on March 28th, but it wasn't until April 17th that we saw a significant change in sentiment. You can see that there, April 17th was the first day when the put-call ratio jumped above 1. So before then, we'd had just an orderly correction. And then on April 17th, it got a little bit more serious. Once that ratio jumped up above 1, there was huge demand for put options, huge demand for protection and hedging. So that's a little bit of a way to... Let's jump over to barchart.com and have a look at a couple of different places where we can monitor put-call ratios. So the first one is on the main option screen, just barchart.com/options. And we can see over here, we've got our put-call ratios for the main equities and indexes. So total would be indexes and equities. CPCI is just the index put-call ratio. Then CPCS is just the equities, and then we've got a bond put-call ratio as well. So really quick way to scan the market and see what's happening on a day-to-day basis. We can see we've got a 52-week high, 52-week low, and a good one to just keep a track of. Really simple to view that very, very quickly each day on barchart.com. The next place you might like to have a look is on the most active stocks page, most active options. So here we're sorting the top names by option volume, and we can quickly monitor our put-call ratios across all the main optionable stocks in the market. So a quick scan there might provide some insights. You can see that some of the Bitcoin-related stocks had a very, very low put-call ratio. I think Riot was up about 20%. Yeah, there we go, 23%. Mara was up 6%. So not a lot of demand for put options on a day like this. There was a huge demand for call options. So a bit of a change in sentiment there in those names. The last place of interest is to look on the actual stock page. And then if we go down under options, put call ratios, we can see the put and call volume across every expiration date. And then we're getting an individual put call ratio for each expiration date. And then down the bottom, we've got our total put volume, total call volume, and our overall put call ratio. Where this might be interesting is we can kind of see here that there's potential medium-term bearish sentiment in Tesla because there's a really high put call ratio from August, September, October, all the way through to December. So could be indicating some potential bearish sentiment and bearish positioning for later in the year, which you might not necessarily see if you were just looking at the first few expirations, which is all around 1. So in conclusion, equity put call ratios serve as valuable tools for traders to gauge market sentiment, identify potential trading opportunities, and confirm signals when combined with technical analysis. By understanding how to interpret and use these ratios effectively, traders can make more informed decisions and adapt their strategies to changing market conditions. Monitoring changes in the ratios over time can provide valuable insights into market dynamics and help traders stay ahead of shifts in sentiment and volatility. Thanks for watching and have a great day.